I have owned the stock for a week now, and the price is not going up. Should I wait longer or sell it?
I have owned the stock for 2 months. The price has gone up by 5%. Will it continue to rise, or is it time to sell and realize my profit? But if I sell now and the upward trend continues, I will give up some of my profits.
I have owned the stock for a month, but instead of the price going up, it has decreased. Should I sell to minimize the loss? Wait, maybe it's better to hold the stock and wait for the price to recover.
These are some of the questions that many people are struggling to find an answer with. Have you heard a term, exit strategy? If you feel overwhelmed by all of these fancy terms, and if investing looks to you as gambling, or an art that you might never become good at, you are in the right place. In this video, we will show you that all it takes to know when to sell your stocks is common sense. This video is the last one from our series of how to find those great companies that can bring you profits over a long period of time, and you never have to sell them to realize your profits. To find out exactly how, please check out our playlists, How to Interpret Any Company's Income Statement, Balance Sheet, and Cash Flow Statement. You might also want to subscribe to our channel, so you won't lose it among millions of other great channels. You should buy when the prices are at the bottom and sell when they are at the top, right? Some investment gurus out there might even tell you that there are some ways to accurately predict when the markets or even individual stocks prices start rising or when they start falling. Don't get it wrong. There is nothing wrong with the logic of buying low and selling high. But as we already know, buying low and selling high is not investing, it's rather trading. Let's not forget that investing is a strategy of putting your money into something that brings you profits over a long period of time, and you never need to sell your investment to realize your profits. Warren Buffett has said in his letter to shareholders, "When we own portions of outstanding businesses with outstanding managements, our favorite holding period is forever." This is exactly because every year his return on his initial investment increases, and this way, he does not pay taxes on capital gains. But does it mean that he never sells? Well, sometimes he does. You might rightly think that if you own a wonderful company that increases your wealth year after year, you will never want to sell it. There are two obvious reasons for this. First, the longer you hold, the richer you get. And the other one is that whenever you sell your stocks, you will need to pay taxes, and you no longer can use this money to earn more money. So, let's find out, when is the time to sell stocks of wonderful companies? Those companies that have competitive advantages over their competitors, the ones that can make you infinitely rich over time. To do this, instead of focusing on market trends and following the herds, we will ask different questions. Have the company's prospects changed? Is there a better place to put my money? And how will selling affect my taxes? There are times when it pays off to sell even those wonderful businesses. Occasionally, you might need money when you find an investment that is even better, at an even better price. You can think of it this way. You might own a business that earns you 3% of compound annual rate of return, and you find a business that can earn you 8% return instead, over next 20 years. You can do the math. CR equals P times 1 plus R in power of N, where CR stands for future value of the investment, P is principal amount, R is the annual return rate, and N is the number of years. For example, 5 million with 3% rate of return will be 9 million in 20 years, while 5 million with 8% rate of return will turn into 23.3 million. Another good time when to sell those wonderful companies is during bull markets, when the prices of these companies' shares exceed by far their long-term economic capabilities. You should know that eventually, the prices will come back to their normal level. There is always another bear market waiting just around the corner. A simple rule of thumb is that when you see the price-to-earnings ratios of these companies reach 40 or more, it might just be time to sell. If this is the case, then you should not go out and buy another stock trading at 40 times earnings in the bull market. Instead, you should put your money in bonds or sit on cash and wait for the next bear market. It's always coming. The third reason to sell a wonderful company is when it looks like the company is losing its competitive advantage. Take, for example, companies like Polaroid and Kodak. once leaders in the film photography industry, who failed to anticipate the impact that digital cameras would have on their film business. Another example is Blockbuster Video, once a giant in the video rental industry until the rise of online streaming platforms like Netflix and Amazon Prime, or newspapers and TV stations, both of which were once fantastic businesses, but their durability and competitive advantage wore out when internet came along. So, here you are. There are 3 distinct reasons why you would want to sell shares in those fantastic businesses. All of them are based on common sense, not hocus pocus. If you found this video useful, please give us a like and feel free to share it with your friends. Thank you for watching and see you next time.